Morning, everyone. For those who may not know me, my name is Tiffany Brinkley, and I'm the Director of Community Outreach at the Potter's House of Fort Worth. On behalf of Pastor Patrick Winfield, the Potter's House Fort Worth staff, and Chapman Realty Group, we'd like to welcome each of you all to our Home Buyers webinar. Now, if you've never been a part of our webinars in the past, you're definitely in for a treat. We hosted this webinar last year as a part of our EduFest Conference and Expo, and it was such a huge success, we decided to bring it back again this year. So without further ado, I'd like to present to some and introduce to others our webinar hosts, Sasha and Stephanie Chapman.
Hey guys, good morning.
We are so excited to have all of you on this webinar. We've been planning this for a minute, and we got some helpful information. It's going to get you home buying, selling, financing, whatever questions you have. We are so excited that you're here. Just before we get started, we just want to make sure we're going to talk about a little bit of home. You need to mute yourself, okay?
Yes. If everyone can go back and mute themselves real quick, we expect to have a lot of people on. We want to make sure this is engaging, so we're going to try to get you guys engaged through the chat, right? Because we've had about 135 people registered, so it's going to be hard to get everyone to speak. So that's a good thing.
Yes, yes. So in order for everyone to be heard and you get the information that you need, please, please, please remember to keep yourself muted. There will be opportunities. If you have questions, you want to make a statement or something, put it down in the chat. That's how we're going to be communicating, through the chat, so that everyone can be heard. And
there will be door prizes as we go through this. So there's going to be door prizes for every, as Stephanie's going to be drawing names out of a hat or out of a cup or whatever. So we're going to be getting that going, and we're so excited. So let me share my screen with everybody real quick. All righty.
Oh, while you guys are waiting, if you are joining us, if everyone can show me your cell phone or your device at this time, just wave it in the air. You got it? Woohoo! All right. So since you have your device and we getting going, take the time to go to our YouTube channel, Chapman Realty Group on YouTube. Go on, like, share, and subscribe to our YouTube channel. Lots of helpful information on there. We will be monitoring. You could get a door prize just from going on and liking, sharing, and subscribing our YouTube channel.
All right. With all that being said, let's go.
All right.
This is our squad. This is our team. These are the folks that make it happen with Chapman Realty Group. We have an amazing group. They're out there working right now as we speak. And so, we thank everyone for their help. And we're going to go into introducing our presenters now. Nod your heads if you can see these screens. Can you guys see my screen here? Okay.
Or a thumbs up.
All right, there we go. All right, our presenters for today. We got Mr.
Ron Warner.
Palmer Holland. Matter of fact, we're just going to let everyone introduce themselves. How about that?
Yes.
Okay. We're Sasha and Stephanie. How you guys doing? We are members of the Potter's House of Fort Worth. That is our home church. We love it. I will tell you, if you're not a member of our church, you should come visit us online or when we open back up for you guys to come out. Okay. It is a beautiful church. We have wonderful things going.
Yeah,
we
Pastor Winfield is amazing.
Yes, he is. All right. Now, I've been a real estate agent here for the past 4 years. I'm in the top 1% in this market. We sell a lot of homes. We help a lot of people. We sold over 10.3 million last year, and we've helped over 100 different families get into homes, and we would love to help you. Our style is to be upfront with you guys and let you know what's going on in the market and give you the information that you need.
Exactly. And I am Stephanie Chapman, his other half.
Better half.
Okay. And also the cheerleader marketing director for Chapman Realty Group. So just let everyone know I am not an agent as of yet.
Wink, wink.
Wink, wink, nudge, nudge.
And then we have Derek. Can you introduce yourself real quick? You're on mute. Unmute yourself, brother. Derek, I think you're on mute.
Can you hear me now?
Yep.
Yes, my name is Derek Walls. I'm with Superior Real Estate Inspection Services. I am the owner and founder of that particular business. have a team of inspectors that work for me. I've been knowing Sasha for about the past 2.5 years. Are you guys hearing me okay? Okay. I've been knowing Sasha for the past 2.5 years. I think we met back when Sasha started at Keller Williams. Uh, and one of the things I like to just say about myself, I really enjoy doing what I do. And that's why it's such a good feeling to be aligned with someone like Sasha, because we share some common goals. I always like to bring my experience to the industry as far as helping clients with assessing homes and knowing just what they're getting into with their next investment, which is their new homes they're about to move into.
Is
Palmer.
Palmer.
Hey, so I am Palmer. I'm with Cardinal Financial. A little bit about me. I've got a beautiful wife and 4.5-year-old daughter now. Well, they make the rules, so I just follow. And I'm blessed to be alive. So, I've been in lending and finance for 9 years. I've been with Cardinal Financial for 3.5 years. Sales for about 15 years. I think last year I was able to help out close to 85 families secure financing. I've been working with Sasha for almost 3.5 years or something like that. We actually, funny story, we share the same barbershop. And so I picked up his card and just reach out to him. And so we grabbed a cup of coffee and kind of hit it off from there. So I love working with Sasha. I feel like we make a good team. I guess
I would agree with that. We do.
Yeah. We have some fun doing it as well. So yeah, it can't be all business. You gotta enjoy what you're doing. And I think we do that pretty well. I am certified with TSAC, TDHCA, and SEF. So those are grants and assistance programs for first-time home buyers. I'm up in the North Fort Worth area, the preferred lender for 2 DFW brokerages, and an avid comic book collector, which is something that Sasha and I kind of share as well. So common interest there.
Our next presenter will be Ron Warner. He had a family emergency, so Ron's not here right now. But Ron and I have been working together for a good time. He's a really good loan officer as well. He's bilingual. He's really good at what he does, and he is certified with all the down payment programs as well. All right, and our next presenter, Sergio.
Good morning. Good morning. Wanted to make sure I took myself off mute. Name is Sergio Marshall, the founder / CEO of Double M Management Group. Been in credit restoration / credit score improvement for the past 9 years. Owned my own company for the past 6 at this point. My job, one way or another, is to serve and to assist those who have had some previous issues, need some assistance getting them improved. Also serve as a minister right here in Fort Worth at Christian Faith Baptist Church. My job is to help you guys not only correct the previous issues, but also just try to help and make sure that we're all educated so that whatever happened previously never happens again. Worked with Sasha the last 2 years, met him through Palmer. So I've been working with Palmer off and on for the past 4 years or so. NACSO certified, licensed and bonded with the state of Texas. This isn't a part-time gig / tax collection / everything else. It's just strictly credit repair day in and day out.
And I'll say Sergio's the truth. He's helped me. He's helped me instead take himself off our credit report. So you need to have someone who can help you get through that. That is for sure.
Right. Our credit score is looking good.
Nice and healthy. Looks good. Appreciate you, brother. Abel, where you at, my friend?
What's going on, guys? My name is Abel. I am with Goosehead Insurance. I'll tell you guys a little bit about myself. So I'm a Dallas kid. Unfortunately, I live in Houston right now, but it's okay. I have my Mavs jersey on at all times. I went to school at the University of North Texas, graduated from there, started working at Goosehead. I've been working with Sasha and Palmer for about 2 to 3 years now. Sasha and I instantly hit it off over our connections over basketball and anime. And then Palmer and I hit it off over our connections over Marvel. So between all of us, we became a pretty cool team. Basically, what I do is I look around in the market, find the best option whenever it comes to insurance. I find the best option for every single person. What's best for one person may not be the best for the other. So I find the best for you, personalize it according to what you would want for yourself. And I work with you. If you're coverage conscious, I'll work to find the best coverages for you. If you are more price conscious, I'll work with you and I'll give you my suggestions on what I would do if I was in your shoes. So yeah, reach out. I'd be happy to help you out.
All right. So with that said, all right, once again, if everyone can go back and put yourselves on mute, please. We really appreciate it.
Right.
All righty, let's get going.
Before we get started, I think we need to do one drawing.
Okay.
Just to keep everybody hyped.
Let's do one drawing.
One drawing. All right.
This one's going to be for what, though?
This one is going to be for, we have Grub coupons. So, where did I put it? Oh, yeah, right here. I had to put it on the board so I don't forget. So we have your next entree. It's a gift card. All you have to do is present it. You're like, how am I going to get it? So once I call your name, you're just going to drop your information in the chat. And then I'll be able to mail it out to you. But it's a free entree, value up to like $10 or more for entree at the Grub Burger Joint. So, here we go. This is Miss Monique Johnson. Woo! Congratulations.
Yay!
Monique, oh, there she is. Okay, I was looking for you.
I'm here.
Congratulations, Monique. You do have to be present to win, guys, by the way. Just want to say that.
Yes.
All right. Monique Johnson, okay, we got you.
We got
Message us in the chat real quick and we'll get to you. All right, let's get into this whole thing. All right, so to talk a little bit about the webinars real quick, we've had a lot of success. Since we've been doing these webinars, we've sold about $4 million in homes, and we've helped 18 different families to learn the home buying and selling process. As we speak right now, we have $1.8 million worth of homes under contract, and we have 5 different families who actually are part of the church as well as going through the webinars at the same time. So we're giving you guys some valuable information. It does work. We will be following up with you to make sure that we get you guys going. All right. Now, with that being said, what are some home buying myths out there?
Oh my goodness, there's so many myths out there when it comes to buying a home. We know that you've probably heard several out there, but here's just a few. Like renting a home is always cheaper than buying a home. That's not really true.
No.
Sometimes you can pay about as much in a mortgage as you are going to pay for renting somebody else that money so they can pay off that home.
Right.
Myth number 2, you need a perfect credit score to buy a home.
Let me ask this question real quick. Put in the chat, what do you think your credit score needs to be to buy a home? I'm curious what you guys actually think out there.
Mm-hmm.
Let's get that in the chat real quick. Let's see what everyone is saying. What do you believe your credit score needs to be to buy a home? We'll get at just a couple seconds there.
Sorry.
Hold on, we're looking at this 620, 700, 700, 650, 400, 620, 640. Palmer, what do you say? You're the expert out there. Palmer and Sergio, what credit score do you need to buy a home?
Well, I guess the best way to answer it is it depends on the type of loan program that you want. 620 gets your foot in the door with a lot of grants and assistance programs, which I'll cover a little bit later. If you've got capital, if you've got money, I've been able to help veterans as low as 550. FHA financing is 550. And then it also depends on the bank and the lender too, as well. So I can go into a little bit about that, but I would say if your credit score is at least above 580 plus, that really kind of puts your best foot forward with financing with whomever you choose. So I saw some 580s in there, which I like to see. You don't need to have 700, 720s. I mean, if the goal is to get a little bit better interest rate, then of course, the better the score, the better the rate, so on and so forth. But if your goal is just to purchase, 580 plus is a good start.
Yeah, this is definitely more Palmer's wheelhouse, so to speak. But from what I've seen, 620 or better. That's what you want, because you don't want to just qualify or barely qualify. The better your scores are, the better your interest rate, which means the lower your payment. It also helps out with, some other things that I know Palmer's going to discuss in a little bit. But yeah, 620 at least bare minimum. Everybody talks about 700, 700. That's what we always hear. But I mean, if you start off in the 400s and 500s, you're not going to get there immediately. It's going to take some time. So yeah, at least 620.
All right, cool. Let's talk about a couple other myths. Down payment. Everyone believes you have to have a huge down payment. And also, I hear this one all the time. They think there's no benefit using real estate agent. Let me explain something. For everyone out there, as a buyer, if you're a buyer, my service is 100% free. You don't pay me a dime. The real estate agent gets paid by the seller. All in every real estate transaction, whether it's new construction, you name it, they get paid by the seller. So why would you not use an individual who's been doing this, who negotiates contracts, who knows how to get you into a home for free 99?
Free 99.
Did you guys know that? Put in the chat if you knew that we were free 99 for buyers, yes or no? I'm curious if you guys knew that. Okay. No, I'm seeing a bunch of no's. Yep. Well, we're free 99. Now you know. Myth busted. Let's talk about that down payment. How much you guys think you need to put down to buy a home? What percent have you heard that you need to put down to buy a home? I'm curious to hear that right now.
If you have 100,000 down, you want 300.
I see a question here already. Somebody, if we have 100,000 down, we want a $300,000 new construction home. If you're putting down that much amount of money for a $300,000 home, I mean, that is awesome. I mean, you don't have to do that. You really don't have to do that. But if you're doing that, you're really going to have a low monthly payment, right, Palmer?
Sorry, had to unmute. Yeah, correct. Yeah, I mean, it's not the requirement there, but I mean, that'll get your monthly payment down significantly lower than just putting the bare minimum.
I see 3%, 20%, at least half. So everyone thinks the number is all over the map. And I'm gonna let Palmer answer that one. There's so many ways you can put money down, right? Palmer, how much money does a person really have to put down to buy a home?
I think you and I have. I mean, if they're a first time home buyer and they're qualified with one of the grant programs that we work with, I think you and I have put somebody in the house where they get a little bit of money back. Right. They pay for the inspection and things like that you'll go over a little bit later, and Derek will cover as well. But sometimes you can get some cash back at closing. So it's all about what the application looks like, what the financing looks like, and how we can best suit you guys and put you in a good loan.
Right. So guys, you're going to hear that quite a bit. You're going to hear that it depends, but just keep this in mind. You need to talk to a good lender that can get that explained to you. I've seen people put no money down. I've seen 3%, 5%. I've seen people do 20%. The only reason why people typically put 20% down is to get a low down payment and to have no private mortgage insurance, and that's it. But you're not required. You are not required to put that much money down. And that is a huge myth that throws people off. Mm-hmm. By the way, these are our first clients. I just want to point this out. These are actually real people. These are our first clients. We absolutely love them to death. And so just want to point that out. Mama and Papa T. Mm-hmm. All right. So let's talk about the current real estate market real quick. Let's jump into this. All right. So here's the deal. There's a bunch of graphs on the screen. It's all saying this. There's a lot of houses that are selling right now. At the end of the day, the days on market are really, really low. Like houses, this number says 19 days. That is the average of entire DFW. But the nice homes in this market last 3 to 5 days tops. And that's it. Okay. Home value, median home value right now is at $338,000. That is up, guys. That is up from $303,000 of last year. And we're going to see that keep going up and up and up. All I have to say this, right? This is what the market looks like right now. We have low inventory in DFW. The market is very competitive. I'm curious, what have you guys heard about this market? What are you hearing that's really going on in this market? I want to make sure that you guys, I want to know. Rent is definitely going up and home values are increasing. Tell in the chat, put in the stories that you guys are hearing about your friends buying a house or the experience you are having buying a home. Because I'm curious who's waiting for this. Who's waiting for this bubble to pop? Because I know a lot of people think it's going to pop, right?
A lot of people, they keep saying like, oh, I want to, but this is crazy. So I'm just going to wait. It's going to change in like 6 months or.
6 months. 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 6 months Yeah, so let's say you got
Well, some people are saying that it's not a good time to buy right now. Californians are driving up the prices, paying more than 40K over asking price.
houses to go down, rent is going up.
Mhm.
So a lot of this stuff is true. Now let me just say this: is housing going to go down? No. The truth of our market is this: we have jobs, guys. We have jobs. As long as we have jobs coming here in DFW, and we have seen our beloved DFW go from COVID migrations being one of the top destinations in America for COVID migration, job growth, we're already top 6. So what does that mean? Supply and demand. We have a lot of demand. What the problem is, we don't have a lot of supply. Okay, so it is very competitive out there, but we can still show you guys how to win. It's hard for first-time home buyers. It's a seller's market. It absolutely is a seller's market right now. We've been in a seller's market in DFW for the past 8 years. That's not going to change because the demand is where we are, but that doesn't mean that you can't still get your home. Okay.
Right.
So the reality, it starts looking like this. Rent is up. You guys are exactly right. Home values up. Interest rates are pretty darn good and low. Cost of living, that's fluctuating. It depends on what's going on with your job. And then equity. You know, if you own a home, you have equity. If you don't, you don't. You know, a lot of people are throwing away a lot of money right now in renting a home. And I'm just curious, how much are you spending on rent? Because the average rent in DFW right now is $1,800.
Right.
So let's talk about that.
Well, Jason has a statement. Jason and Melanie McBride, they say it's hard for first-time home buyers out there. And then Miss Rhonda was saying, if it's a seller's market, don't houses usually go up?
Well, the home values are always, they have been going up because of the seller's market. So demand does play a little bit into that, but we actually just have a really strong economy here in DFW. So that has been very helpful for us to answer that question. And let me just say this, it is hard for some first-time home buyers, but that depends who you're working with. You know, we work with a lot of first-time home buyers and we get our people into homes. I got Derek out there looking at houses and inspecting homes every other day. And those are first-time home buyers. Palmer's pre-approving people every other day, and those are first-time home buyers. So the big part of this equation is, who are you working with? Who's on your team? Our job is to work for you guys and help you get into a home. So you need to I don't know if you're in that situation, but you need to evaluate that. So I'm curious not to get in everyone's business, but as your real estate agent, I will get into a little bit of your business to help you out. All right. How much are you guys paying in rent right now? I'm curious. Just put in the chat, how much are you guys paying for rent?
One individual said 1710.
1710, North Fort Worth, my hometown, my area. 1710 is pretty good right now. North Fort Worth, 1169. The numbers are going to keep coming in.
15. Ooh.
Look at that. Here's the bottom line.
Ooh, 970.
Yeah.
Where you at? No,
If the average rent is $1,800 and you got to put down your first month rent, a pet deposit, an additional deposit, you're looking at somewhere between $3,600 and $4,100 up front. And if your credit's not good, you're almost at $6,000 because they're going to ask for that double deposit. And what we're seeing in this market right now, we're seeing highest and best on renting. Highest and best on renting. So that's something I want you guys to think about.
I'm on your team, Sasha.
You're on my team? That's right. Be on our team. Let's go.
Right?
And let's show you how we can be on your team and help you guys out. Oh, sorry, skip here. So the benefits of home ownership, build equity, predictable monthly payment, you know, and this is really real. This country is going through a state of wealth building like crazy. We're seeing separation of wealth at a very high level. So we want to try to help you guys with that. Owning a home will make you wealthy. At the end of the day, homeowners have 40% more net worth than renters. It's always been this way, and this number gets bigger and bigger and bigger every year. Okay. Now, let's look at the chat. Do we have any questions about the market before we go into talking to our homeowners out there? Any more? I want to make sure we captured all the questions here.
Pretty much just saying how much people are actually paying in their rent, which is almost close to a mortgage payment.
Right.
So, especially if you're in a 2-bedroom apartment.
Someone's asking about weather damage in Texas. You know, our weather's not that bad. We get some, lately we've been getting some thunderstorms and some hail, but that's what your homeowner's insurance is for.
It's just the season.
Yeah, we go through seasons. Abel is going to be able to help you out with that. That's for sure. You know, one thing I would just stress to everyone is this. If home values have been going up 6% every year, and this past year they went up 16%. How much is your pay going up every year? I want you guys to think about that. If you're getting a 2%, 3%, 4% raise and home values are going up, you need to, you can do that math. I don't know how to tell you, but you can do that math. The time is right now. All right. Okay, we come back to those questions, sir. Does the area you're looking at matter? Yes, the area does matter. Some areas are better than others. Some areas are going to be cheaper than others. So that definitely matters. Hold on.
While
All
you
right.
guys are filling in, I'm just going to do another, while you guys are thinking about that, another giveaway.
Okay, let's go ahead.
All right, so let's see. This giveaway this time is from Simply Sandra. Simply Sandra, she makes customized t-shirts. You know, that's the thing. Everybody wants a customized t-shirt these days. So she's giving you a $25 gift card to her shop, but you can get you a customized t-shirt. So that individual that will be getting a customized t-shirt is Shantae Smith. Shantae Smith, thank you so much for joining us today.
Is she on the Zoom?
She is on the Zoom. She's
Is
right
she?
there.
Okay.
Yes,
hey,
I
Shantae.
am here. Yay, thank you.
All right,
You're
Shantae.
welcome. Send us
Send
a
some message in the chat, and we'll get this over to you.
Smith. Shantae Smith, thank you so much for joining us
Is she
today.
on the Zoom?
She is on the Zoom. She's
Is
right
she?
there.
Okay.
Yes, I
Shantae.
am here. Yay, thank you.
All righty. So let's talk about our homeowners. Homeowners, y'all are in control. You guys are in control. This is your market. So what can you do? You can do nothing and just collect your equity on your home. You don't have to do anything. Stay in your house if you want to. Okay. But right now, you can make improvements on your home and build even more equity. Right. You can take out an equity line of credit, or you can sell your home. It's a great time to sell your home. You can downgrade and upgrade. There's lots of options out there. So we're going to talk about, or you can refinance. I mean, you can obviously refinance and lower your payments from that perspective. Palmer, tell us real quick, what do they have to do to refinance? How does this work exactly?
Can you expand on your question?
Well, if someone wanted to go refinance their loan, how would they actually start the process with you? What would they actually do?
Oh, yeah. Okay. All right. So, I mean, it's as simple as, applying to purchase a home, right? So, I mean, the very first step is really having a consultation as to trying to figure out what your goals are. Are you trying to refinance your home to lower your interest rate, lower your monthly payment, extend your loan out? Are you looking at a refinance where you can pull some equity out of the property to do some home improvements? So really the first step is just kind of engaging in that conversation with a professional, a lender, bank. I'd be happy to take a look at it and just trying to figure out where your goals are, designing the roadmap for your refinance. After that, we look at if what we're talking about sounds like something you'd be interested in, we'd start with an application and take a look at your credit in getting you approved with a couple different loan programs, whether it's a FHA Streamline, where there's very little documentation, it's very quick, can be done in about a week. Conventional refinance or something like, maybe you're a veteran, so you're looking at a VA Streamline. So really it's at that point, it's just kind of putting some ink to paper and taking a look at the application and options, numbers.
Okay.
Did I answer your question?
Yep.
Okay,
absolutely.
cool.
So if you would like to set up an appointment with Palmer, we're going to put his link down in the chat real quick for you. If you need to get with Palmer to look at refinancing, we're going to put that link down in the chat for you guys real quick. All right, Sam, can you do that for us? All righty. Now, let's talk about if you want to sell your home. Here's the deal, guys. You're in control. How do you want to sell your home? If you want a fast sale, we can get you a cash offer, no problem whatsoever. I would definitely tell you though, your house will sell fast in this market if you hire the right agent. If you hire us, we're going to take care of make sure it sells pretty quickly. Give me a weekend, go to the spot, go away, go do your thing, go have a good time, and let us do our job and really get your home on the market and ready to sell. Okay, we're going to coach you through the process, but going on market does not have to be this jarring event. It doesn't have to be so difficult. We know how to walk you through the process. We bring people in to help you. So here's our process. We're going to talk about some pricing, what makes sense. We're going to go over the market, and then we'll talk about you presenting your home and getting it staged appropriately. And then when it really comes down to selling, we're really good in highlighting your home. We get professional pictures. We do a lot of video. And we're going to make sure we know how to get this market ready to go, and we know how to advertise to teach people to want to see your home and then don't do it. But here's the reality. Before we do all that, right now, we're not even putting homes on the market. At Chapman Realty Group, we have so many buyers that are looking to buy a home. We can price match you with some of our buyers who actually want to buy your home without you even going to the market. So you can skip all of this stuff if you want to, right? And you'll be educated on what's right, what makes sense, and what you can get on the actual market. If you want to go to market, you can do that. But we're selling a lot of our own listings off market as we speak and giving our sellers pretty good discounts out there as well. Now, once that's done, we go through negotiation phases, offers accepted, and then you close. And here's the deal. I'm going to sell your home at least 4 times, right? Why is that? I'm going to sell it to the buyer. I'm going to sell it to the buyer's agent. I'm going to sell it to the home inspector, and I'm going to sell your home again to the appraiser. You have to continue selling your home. A lot of agents are going to put a sign in the yard, walk away, and let the market sell their home. We're going to sell your home, and we're going to make sure that happens, okay? Now, when it comes to going to market, we have people that are going to be coming in that can advise you on what we need to do with your home to highlight it. There are certain things, even though this is a seller's market, that just won't work. If your roof is shot, if it's messed up, these are things we want to get taken care of. Your foundation is looking bad. There are certain things that we want to do to make sure your home is highlighted so we can get you the most out of your home. These little things do mean a lot. I can tell you that. And I have seen agents claim there's something wrong with a home because someone didn't paint and there's a minor crack and they think it's a foundation issue. So let's take those issues off the table for you, and we know how to work that out as well. All right. Now, so if you are interested in listing your house right now, I'd be more than happy to talk to you and do a listing presentation. I'm gonna put a link down here for everyone. You can go to my calendar to set that time up. I had a very specific question that got emailed to me about someone who's thinking about buying and selling at the same time. So I'm going to answer that question right now. The question was, how do I go about buying and selling my home in this market right now? Okay, I'm glad for that particular question. So here's the dealio. If you want to buy and sell right now, we have to be careful with that. We have to make sure we put you on the market in a way to where you can stay in your home and not have to go through a hotel or something like that, right? So first things first, we gotta take it through the buying process. We'll stay on this webinar. We'll take it through the buying process. We need to get you pre-approved and get you out there looking for your home, okay? And then sometimes we gotta sell the home while you're still in it and give you what is called a quote unquote lease back, meaning that you stay in the house for a month or two until you can buy your new home. It happens all the time, right? So we do this with a lot of individuals, but the timing is what's important to make sure, because once you pay, someone else buys your home, you're technically living in their house. And so we want to make sure that we time it in a way to where when you're closing your home, you can then go into the next home. It happens a whole lot, but it's really easy to do. We do it for a lot of people. And if you're interested in us doing a listening consultation, there's no commitment here. It's all about just having a conversation and let us talk about how we can help you sell your home and look at what the different options out there. If you're building a brand new construction home, that's what you want to do. You want to list your house and build. It's the exact same process. We just have to time it out for you. So does anyone have any questions about selling your home right now that I'd be more than happy to take and be more than happy to answer? I'm gonna leave the screen up here for a hot second so you guys can either scan to schedule with me or click on the link to schedule with us, and we'll go from there. So do we have any home sellers out here with a more specific question than that?
We have a question from Jason and Melody McBride earlier. How
Okay.
often are cash offers happening? I can't compete with that.
Well, here's the thing. Cash is not as king as people think. A lot of people want to say cash is king, but it's not as king as people think. So to answer your question, you can't compete with cash, because if I'm coming in with a cash offer and let's say a house is $300,000, okay, and I want you guys to put this in the chat. I want to see who would do this. If someone comes with a cash offer and your house is, let's say, $300,000, and they offer you $275,000 cash, and then I tell you that you can wait another 2.5, 3 weeks, and you'll get 325. Or are you taking the 275 or the 325? Put that in the chat. I want to see who would do what. Because I know I can wait 3 weeks for that extra money. That's just me. I don't know about anybody else.
So
Wait,
far,
325. Wait. Anybody want that 275? Let's see if anyone wants anybody.
Waiting.
Okay, now let's change that. Let's say I offer you 315 cash. Or you gonna wait for the 325? Who's gonna wait? Who's gonna wait 2 or 3 more weeks for $10,000 more? So I went for the 315. There it is. Wait. See, that's the whole story. It depends on who we're talking to. So it's not a one-off deal. Everyone looks at it a little bit differently. So, all right. Do we have any more questions? I want to make sure we caught them all. All right, cool. Once again, if you want to talk about listing your home, we'd be more than happy to talk with you. All right. The home buying process. Now let's dig into this. This is where the fun starts. All right. And for my sellers out there, you need to watch this too because you're a home buyer. First thing we're going to talk about is, what are they doing, right?
Yeah. Why are you moving? What's your time frame?
Yep.
What do you want in your dream home? That's always key. Everyone sits back and think, do they want the white picket fence?
Yeah.
Do they want customized blinds and stuff? So what's your top must-haves that
And
you
what's
gotta
important?
have?
Yeah, what is important to you? That's what the initial consultation is going to be about. But beyond that, before we get deeper into that, let's talk about your credit. All right, Sergio, you ready, buddy? Let's talk to these guys about credit, how the credit actually works in the home buying process. I'm gonna turn this over to Sergio right now, guys.
All right, good morning one more time. Before we dive into this, I want to say a couple different things. I've seen some of the messages and I got a couple direct messages and I'm very happy about that. I know what it is to have a low credit score. 6 years ago, my credit score, my mid score was 481. So I wanted to sit there and say that just to let you know that, for some people who are on the fence and not really wanting to talk about it, think that it's going to fix itself. It's not, but I will be happy to converse with you and see exactly what we can do in order to better your situation just across the board. There's a couple things out there. You definitely can fix your credit yourself. You can attempt, absolutely. But there's 256 different consumer protection laws that are out there. And if you're not well versed with those laws, you may not get the results that you want. So my job is to assist you in any which way that I can, not only to improve your credit, but also to educate you on the do's and don'ts of credit. So once again, whatever happened in the past doesn't happen again. So looking at this first slide, what determines credit score? Right in the very center of that circle, you see FICO. The reason I wanted to make sure that I put that on there was to let you know there's two different types of credit scores that everyone looks at consistently. There's FICO credit scores, which is what your lenders look at, credit card companies. Anytime you go and get a new vehicle or used vehicle, they're looking at your FICO score. The other scores that are out there, which we see all the time, are called Vantage scores. That's found on Credit Karma, Credit Sesame, basically any free site that you could think of, they use Vantage. The reason that's important for you to know, a lot of times people will look at their Credit Karma and they'll see a specific score and they'll think, hey, it's showing 680. Let me go ahead and apply for a mortgage right now. And then when they let the loan officer, the mortgage lender pull their report, the score really is like 560. And the reason for that is there's a difference in how everything is weighted between Vantage and then FICO. So when I look at Vantage, when I think about Credit Karma, think about all those different sites, I think FICO, don't look at them. Don't let them confuse you. Once again, be happy to walk you through pulling a report, which will not damage your credit score at all, that at least will show you a FICO so you know exactly what you're really working with. 35% of your credit score is calculated. It's your payment history. What you pay on time, your credit cards, your auto loans, if you have an existing mortgage and you're trying to eventually refinance. I've seen people who are in the 700s miss a payment and their credit scores drop down to 5 something. And it's strictly because they weren't showing good payment history. Another thing that factors into that is the amount owed. On your credit cards, you want to stay away from maxing them out if at all possible. You want to keep the balance at that 25% max at any given time. Or that is the credit card companies only report to the credit bureaus once a month. That's it. So if you keep it below 25% at all times, then you're always showing your best foot forward. Another hidden thing to write down, the day that they report to the credit bureau, is a different day than when your bill is. So for instance, if you have a $200 limit on your credit card and you say, okay, as long as I pay that 200 bucks off, by the time that the bill is due, I'll be good to go. More than likely, they've already reported showing your card maxed out and you're costing yourself some points. So if you call the credit card companies yourself, you can actually ask them what day they report to the bureaus. They will tell you, and you just make sure that you make your payment before that date, which is normally before when your bill is due. Another thing that weighs heavily is the length of your credit history. The older your credit cards are, the better. The older that you have had credit cards, the better. We get caught up sometimes on the, oh shoot, I can transfer this balance from this card to this card to this card, and then close out the old ones. Now you want that history. I have a credit card that I've had for the last 7 years. It's only 200 bucks, which is fine, but I want that history. I want to maintain that. I want to keep it, so I still have it open. I use it once a month for a Snickers bar, just something light, as long as it's showing some form of activity. Another part of that is new credit. Try to avoid from having 50 different lines. It's unnecessary. 2 or 3 is perfectly fine. And then also types of credit used. Credit cards count as revolving credit because it's a certain amount that they give you, 200, 500,000, whatever that case may be. You use it, pay that off, and then you're able to use it again. So that's revolving. The other part is installment. That's going to be like an auto loan or furniture or a mortgage, anything like that, because it's one set amount that you're borrowing, and then you're just making a monthly payment each and every month to pay that down. And we can go on to the next slide.
Hey, Sergio, real quick, we
Yes,
got a
sir.
question in here that says, how often should one check our credit score?
So I strongly encourage, in fact, it's actually a requirement for any of my clients to actually have some form of credit monitoring. And I'm not talking about Credit Karma. It is one that you pay for. And I do that so that way every single month they're able to get a new report with the credit scores. Especially when you're trying to purchase a home, I would monitor it regularly just to see if there's any changes, anything like that. You don't want to get caught off guard, get to the closing table, and then something new pop up that you weren't aware of. So I have 2 different forms of credit monitoring myself. I don't check them all the time, but if I get an alert, I know something changed, and then I go ahead and handle it at that point.
Okay, cool.
All right. What is on your credit report? As we talked about, there's credit accounts, the date open and closed, the payment history, etc. Y'all can read it, whether something is open or closed, if it's individual, joint, authorized user, the age of the account, all that's on there. The things that negatively impact your score, which is going to cause it to drop, charge-offs, collections, repossessions. Charge-off will be like a Verizon Wireless. If you borrow something from Con, all those because they're still with that original creditor, collection company who they sold it to. There's a myth out there that, after 7 years, something is just going to miraculously fall off your credit report. That's not true from the standpoint of any time within that 7 years of that original creditor having a debt, they can sell it. If they sell it, that restarts the clock. So if it's been 6 years that Verizon has had this debt, they haven't done anything with it, and then they sell it to United Billing, United Revenue, whoever the collection company may be, that collection company then has 7 years to collect on that debt. It hurts you, brings your score down twice almost for the same thing. So it's better to get that type of thing resolved ahead of time. Repossession, y'all know what that is. It speaks for itself. Whether you were the main person or a co-signer, it's going to hurt you the exact same. So that's why I strongly encourage not to co-sign for anybody.
I bet a lot of people didn't know that though. Who knew? Put in the chat if you knew that would restart the clock on you. Did you know what he just said, that that's going to restart the clock on your credit? Yes or no? I'm curious who knew that. I see one yes, a lot of no's, a couple more yeses. So it looks like we may be 60-40 on that one in terms of people actually knowing that. That's amazing.
That's why
this is why you need to get a specialist to help you out. If you're in that type of situation, this is why you need a specialist out there. Matter of fact, I'm going to put Sergio's information in there again. If you need his services, guys, schedule with him. At least just start with the conversation.
Right.
Start with the conversation. He's really good at it. Obviously, you can tell he knows what he's talking about. So just start with the conversation.
Inquiries ding. If you're home shopping, I recommend it is what it is. I'm biased. Using Sasha and using Palmer, you only have to get it pulled one time. You don't have to worry about it. But for instance, if you're mortgage shopping and it's all within Palmer, is it 1 day, 2 days? How long is it?
Yeah, I've always been given guidance, and I always advise 14 days.
14 days. Okay.
14 days. Yeah. So I mean, it'll each poll will show up as an inquiry, and then you might want to touch on how multiple inquiries might affect it. But the revolution of what the credit bureaus will do is, I mean, at the end of the day, your credit is the only thing that really can be used to shop for a loan, right? I mean, that the credit bureaus understand that. So the lenience they've given is 14 days. So if you have 5 lenders poll within a 14-day period, that a hard hit will only reflect as 1 as opposed to the 5 or however many you get within that period. So yeah, but you'll see all the inquiries on there.
But it's only really hurting your score just the one time.
Right. Yep.
Same thing with autos, exact same thing. You'll mess around and see 14, 15 different inquiries from an auto loan, even though you only apply for 1 loan. It's just the way it goes. Bankruptcies, whether you've actually went all the way through or whether it's been discharged or whether you started and then it was canceled out, they still show. In fact, they show up for 10 years. So it's longer than the normal 7 years, and they show up in the public records section of your credit report. Same thing with evictions, which of course make it harder in order to be able to get an apartment. You can move to the next one. All right, credit tips, pay your bills on time. This is so important. We touched on it a little bit earlier, but I want to just reinforce that because sometimes we get irritated if a car company or somebody we feel doesn't treat us correctly, we get emotional and just say, bump it, I ain't paying that no more. It's going to hurt you more than it is going to help you. So stay away from that. Avoid debt consolidation all the way around. The reason for that, they basically have you make 1 payment every single month, right? But if your credit cards are different times throughout the month, you're going to have late payments from those different companies because that company that you hired is only paying that 1 time. We talked about no co-signing for anyone. We talked about keeping the balances below 25%. Once again, if you're not familiar with the over 250 something different consumer protection laws, please call me. We can schedule a consultation because I do not dispute when you're talking to a loan officer, someone that's going to process your loan, when it gets to underwriting, they're going to look and see if there's any what's called dispute verbiage on the report. They don't want to see that. If they see that, they're going to kick the loan back. Dispute verbiage artificially increases your credit score, even if nothing actually came off your report. It's going to increase it a few points. So they don't want that on there. So we make sure none of that type of stuff, none of that verbiage is showing up at all. Outside of Equifax, Experian, and TransUnion, which are the 3 major credit reporting agencies, there's a few others that most people or most companies don't know anything about. There's SageStream, there's LexisNexis that are out there. Those are important because a lot of information shows up on those back channels, especially LexisNexis. Basically, every address that you've ever lived at since you was 18 years old shows up. If you order your LexisNexis report right now, it's over 100 pages long. They report to Experian. So it's important to make sure that that is tightened up as well. So that way the information that the bureaus have is fixed. Since we leverage what's called the consumer protection laws and we're not disputing, we're looking for different errors, things like that that are on the report. Sometimes it's not about whether you did or didn't do it. It's about the procedures on the back end being followed to make sure that they legally and rightfully should be reporting on that information. Quick question for you guys that you can please put your response back in the chat. If you got a ticket, just a standard speeding ticket, would you go to court to fight that ticket, or would you just pay it to be done with it? Pay it and be done. I figured that. Someone go to court. Okay. Pay it because we don't want to deal with it. Got you. If you go to court to fight it and the officer that wrote that ticket does not show up, what do y'all think happens to that ticket? You are correct. Yep, it's dismissed, it gets thrown out. It's not about whether you did or didn't do it. It's about the procedures, it's about the proof to sit there and show whether or not it actually took place. I say that to say, when it comes to your credit report, keep that in mind. If they're reporting one thing to Equifax, one thing to Experian, it's something completely different than TransUnion. They say that the date opened is 2020 on one report, and then on the others it's showing 2017. That's an issue because these companies have to report the exact same across all three credit bureaus. That's the reason that there's the Fair Debt Collection and Practices Act. All these different things are out there and available for you. You just have to be able to take advantage of it.
All right, so that was some awesome information. I'm gonna have to keep that in mind if I ever get a ticket. I'm going straight to court. But if you guys have any questions for Sergio, please go and schedule an appointment with him. As you can see, he knows what he's talking about. He got great information. So schedule an appointment. His information is in the chat. You can also use your device and scan the QR code right here. Give him a call.
And so, Sergio, you got a lot of questions in the chat that you need to go through and answer, my friend.
I sure will.
Yep, you go do your thing. We're going to keep it pushing, moving on here, guys. We're talking about the lending process. Okay, so now at this point, you know, you're ready to get going. You feel like your credit is pretty healthy. And this is the big step. This is where people stop. I talk to so many people all the time. And then I say, okay, great. I need to get you over to a lender. I need to get you to talk to Palmer. And I need to get you pre-approved. And they say, wait, I don't want someone to pull my credit. That's like going to the doctor and saying that, hey, there's something wrong with my hip, but I don't want you touching it and I don't want you looking at me. Okay. And people don't go through the pre-approval process. So Palmer, let's talk about that real quick. How does the pre-approval process work? And just walk us through this.
Yeah. Well, so I mean, the home, just kind of adding on what you said, that the home search process is the best part about it. You know, looking at the different homes and seeing what you can get. But the loan process is not. So what I try to do is I try to make it informational, fun, and really present to you all the options that are available to you. You know, I hear it a lot where, you know, somebody is referred to me, maybe they're working with you, Sasha, and they talk to a couple different lenders or banks or something like that. And, you know, they end up wanting to get a second opinion. And so we jump on a call, we do a consultation, we figure out what their goals are, what they're really looking at, where they want to keep their monthly payment and so on and so forth. And, you know, 30 minutes, 45 minutes into the call, I get, you know, the other guy didn't explain any of this. You know, it was just basically, they felt like it was just give me all your information. And then, you know, here's what you're approved for. Here are the loan programs that you are, and good luck kind of deal. So I try to have a very hands-on approach when it comes to working with clients, because at the end of the day, buying a home is one of the biggest financial decisions that anybody's going to make. I mean, and you might make it one or two times in your life. So really the process that we look at is that initial consultation, figure out what your goals are, figure out what your timeline is, you know, what type of homes you're interested in. You know, this is where, if you're working with Sasha, you know, we've kind of maybe developed a little bit of an idea of where you're comfortable with, what areas you're looking at. And then from there, the pre-qualification or the pre-approval process is really just filling out a credit application. Same thing that is done when you go buy a car. You know, you go and look at the cars, you look at the different models, and you're like, look, I want to buy this one. And what are the next steps? And the sales guy gets you set up with a credit application. They pull your credit, and then you know, next thing you're really talking about numbers with the finance manager and so on and so forth. It's the same process. We look at general information, employment information, income information, asset information. And then so from when the application is completed, I have the opportunity to look at, as we've got on our screens, multiple different loan options. So if you're a veteran and if you've served our country, thank you for your service, first off, but there's a loan designed for you, right? There's the Veteran Affairs is insured a loan to where it's a 0 down payment loan. So it's a great product. If you're a first-time home buyer, you might be looking at an FHA loan. This for the longest time has been known as the first-time home buyer program. It's a low down payment option, 3.5% down. If this may have been this will be your second or third purchasing, you might look at a conventional loan. Maybe you're in a position that Sasha had mentioned earlier, where you're selling and buying, so you're going to net a lot of equity from the sale of your house, and you want to go into the next house with a very low down payment option, as well as no mortgage insurance, which is something that covers the lender in case you default. So you want to put 20% down or something like that. Then we have jumbo loans. Let's say that you're looking at $1 million house or something like that. There's loans designed for those type of purposes that require a little bit more money down. They're going to obviously have a higher loan monthly payment because they're million and so on and so forth. But so once the application's taken, I can go over all these options. Maybe we're looking at some grant programs or some assistance options so that you can not really break the bank, so to speak, with purchasing your first home. And so the application allows us to really kind of expand on that consultation and figure out where we're at financially. And then let's say, for example, and this happens sometimes, maybe we pull the credit report and the credit's not where it is. Or maybe it is where it is, and we're looking at, getting pre-qualified or pre-approved for $250,000, and all the houses that you're interested in are at $300,000. So then at that point, we can build a roadmap, and we can basically figure out, okay, so your goal is a certain price range, or your goal is a certain program. How do we get you there? How long is it going to take to get you there? Exactly. So the application is really the jumping off point of what we can do.
Palmer, we got a question that came up in my email here. So someone asked a question about when it comes to buying and selling a home at the same time, mm-hmm. and how it works financially. And so the question that we're getting here is, how much money you really have to put down? And I'll start with this one and just say this. When you actually have a home to sell, guys, and you're looking to buy a new home, the good thing about actually having a home is right now you can sell that. You make a lot of money, you're gonna make a lot of profit. You can then take that money, like Palmer was saying, and use that for your down payment. So let's say you got a 3-bedroom, 2-bath, 1,500 square foot home, and you have been eyeing a 4-bedroom, 3-bath, 3,000 square foot home, and you want to really go and get a bigger home, but you're worried about how expensive it's going to be. Well, if you're going to make $80-some thousand or so off the sale of your home, you can then put that down payment. So theoretically, you can go upgrade, get a much bigger home, and keep your payment at the same dollar amount. So a lot of people are worried about that. They're going to have a huge payment. If you bought a home even 3 years ago, 5 years ago, okay, you're sitting on a mountain of equity and you don't even know it. A lot of people don't know that. They're sitting on a mountain of equity, and you can buy whatever home you really want. Obviously, you want to stay within your budget, what's in reason for you, but you can get a bigger home. It is within your reach. You can definitely do that.
Yeah, absolutely. I think the question was, is it difficult to buy and sell or get a loan if you're selling? Is that right?
Well, it was a very long question. They were asking about buying and selling and how much money I got to put down, and then how much my payment's going to be. So every scenario like that is going to be different, right?
Right.
You and I know that.
Yeah, and that's kind of the consultation portion of that as well, right? So if we're looking at an example, bringing in kind of what I had talked about a little bit briefly, you want to purchase a $300,000 home. You've got a property that you're selling. You're going to net quite a bit of money after you sell it, and you want your monthly payment $1,000. Well, your loan is going to need to be a lot lower than just the minimum down payment off of $300,000. So, those are things that we look at when we're speaking about the different goals that you're looking for. So, moving on, the pre-approval process. So, the pre-approval letter, I refer to commonly as a conditional commitment letter. So what it is you've submitted the application, and then we've had our consultation. You go, look, an FHA loan is good for me, or a conventional loan is good for me, or I like these grant programs. So then we take it to the next step where we collect some preliminary documents. We'll collect most recent pay stubs covering 30 days, last 2 years W-2s, bank statements, if you've got a retirement account, copy of your driver's license. In our area, I work with a lot of DACA, C33 citizenship. So we might ask for EAD cards. So we're really just collecting documentation that is catered to your application. And then we take your application and those documents that you've sent over, and we send it over to our underwriter. In our line of work, a loan officer, real estate agent, a credit specialist, insurance guy, nobody has the actual license to tell somebody that they are approved or denied from a loan aside from an underwriter. So when we submit the application over with all that documentation and we're being reviewed by an underwriter, when they issue that conditional commitment letter, the pre-approval letter, as it's commonly referred to as, that's your golden ticket. You know, really what happens is the underwriter reviews your credit report. They review all the documentation. They validate how if we say that we are making $5,000 a month, they are reviewing the pay stubs and they're going, yep, that checks out. And so when they issue that pre-approval letter, when you go out with Sasha and you're putting offers on homes, if it's an agent, a listing agent, or a seller that has, their understanding of how the process works, when they see a pre-approval letter, they should instantly know that you have, one, taken the steps to be diligent about your financing, and that your offer also is validated because it's substantiated by an underwriter's approval. So, pre-approval letters, that's the holy grail of what you are wanting to look for when you're getting financing, as well as what you need to have in hand when you're putting offers on homes with Sasha.
It's a must-have, guys. If you don't have a pre-approval letter, honestly, you're just going to look at houses because you like houses. You're not really shopping for a home because we can't put an offer in.
Right.
And I take people out to kind of get understanding what you're looking for, but I will keep it real with you guys. If I have 10 people calling to go look at a home, the ones who have a pre-approval letter I know can actually buy a home, they're going to get my time. They're going to get any realtor sign from that perspective. So, and you really don't know what it is you can buy until you go through this process. And as you do not want to get to the point where you fall madly in love with the home and then you realize you can't afford it or you're not going to get approved for it. So let's go through this process early. Let's get that whole thing started. In fact, we're going to put a link down here for Palmer for you guys, so you can actually go in to start the application process for those who are ready to get started. We're going to put that down here in the chat as well. All right.
And so there was a question on here, which I think is really good before we transition on. How much, Ms. Modesty says, so how do you find out how much equity is in your home and how can you pay it off?
Okay.
If you have a certain deadline, you want to try to pay it off.
Well, to find how much equity you have in your home, I mean, you need to send me your address, and then I can run a report to tell you how much your home would sell for in today's market. I'll run comps for you and say, based off what's going on, your house is worth X on today's market. You give us the balance of what it is that you owe on your property, and then we'll help you figure out, what you're going to walk away with. But I need to know what's your payoff balance for the loan, as well as, the address so I can run the comps for it. So once we know that, we can tell you what your equity is. Equity is nothing more than the amount you owe, the amount your home is actually worth on the market minus what you owe in the house. That's it. But you need to know how much, your home is actually worth.
And one last question, I think is a good one. Can you start the underwriting process once you get pre-approval?
Oh, yeah, and I just responded back to that. So,
okay.
Yeah, once you're pre-approved, I mean, the underwriters reviewed all of your documentation, or the borrower side of the approval process. Obviously, well, not obviously, because we're doing a seminar here. So the other things that the underwriter would look at is the collateral, right? So, in order to get a mortgage, there has to be a piece of property. So when you've been pre-approved by an underwriter, the underwriter For the most part, they might ask for a couple of additional things, which is completely typical once you're pre-approved. But the big things are going to be title work. You know, a title company has to get involved to make the whole thing legal, basically. You know, they recorded the sale with the county. They show that you're the owner of the property. So they're not going to get involved until you're under contract with the property. So really the other side of the whole approval process with once you're pre-approved is really being under contract with the house. You know, a lot of the third party items there. Hopefully I answered your question. If not, we can jump on a call or something like that after this and maybe kind of explain it a little bit further. I believe this is still my slide, right, Sasha?
Yep.
Okay.
Did you want to go to DTI or you want to talk about down payment assistance real quick?
I mean, I could look at, so the debt to income ratio, really what this is we call it the ability to repay. So we're going to be subject to, one, the loan program, and then two, federal guidance on how much we can give you guys an approval for. So the best example that I like to use when we try to figure out how much, you know, when somebody says, how much can I get approved for? So when we pull your credit report, we're not just looking at your credit score, but we're also looking at the liabilities that are reporting there, right? So do you have a car loan? Do you have any student loans? Do you have a credit card? Do you have a personal loan? And then we look at the monthly payments on those loans itself. And then so what we do with that is we use that in relation to your gross monthly income. So a good example would be this. If you are looking for an FHA loan, rule of thumb is, for affordability purposes, around half of your gross monthly income is where your proposed mortgage payment should be, as well as your debts. So if you make $5,000 a month gross, right? Not net, but gross, half of that's going to be $2,500. So let's say you've got a car loan, you've got credit cards, student loans that total $500 a month. That's your net obligation. So 2,500 minus 500 is $2,000. So the way that we actually figure out how much somebody can afford is we reverse engineer it. And then in this example, what's remaining left over, the $2,000, that's the proposed mortgage payment that we can qualify you for. So then we're really just moving around the loan amount, the estimated property taxes, the homeowner's insurance, and going, okay, a $2,000 mortgage payment equates to, you know, let's say $275,000 in North Fort Worth or whatever area you're looking at. And that's what debt to income ratio is. That 50% is where our ceiling is, our debt to income ratio. And then there's what do my FICO scores impact? Loan approval. Obviously, you know, if we're looking at a conventional loan, the minimum for conventional financing 620. If you're below that, that's not a loan program we can look at. We can maybe look at how we can expand it, or not expand it, but bring your credit score up. It will impact interest rates. It'll impact the cost of monthly mortgage insurance. So mortgage insurance, commonly referred to as PMI, private mortgage insurance, is insurance for the lender and the servicers once your loan is closed in case of default. So that is a cost that's passed on to the client on most loans, unless you put 20% down on a conventional loan. But the higher the credit score, if you actually have to have, if the loan program that you're in, you actually have to have mortgage insurance, the higher the credit score, the lower that mortgage insurance piece is of your monthly payment. So next slide.
All right, so real quick, let's kind of go with down payment assistance real quick. We got to pick up a little bit here. How does down payment assistance really work, Palmer? Let's you and I kind of buddy cop this one here.
Yeah, so down payment assistance are great. There's three major statewide programs. The one that I primarily like to use a lot is the Texas State Affordable Housing Corporation. They have a program that's for police officers, firefighters, veterans. It's called Texas Heroes. And then they have another program that is designed for everybody else, if you're a plumber, electrician, right? But they work in one of two ways. They can give you a grant, or they can give you a second lien that's forgiven after 3 years. But their requirements are pretty simple. You don't even have to be a first-time home buyer. You can't own another home, you know, when you're trying to use it. But you don't. If let's say you sold your house last year, you know, you're not technically a first-time home buyer, but you can still qualify for these programs. Minimum credit score 620. And then depending on the area that you're looking at, they've got income limits. So you can't make over a certain amount of money. In Tarrant County, for the most part, it's around $98,000. And then so it's just applied to your down payment and your closing costs. So let's say that you're doing an FHA loan, it's 3.5%. You wanted to get the grant, and they'll give it in the form of percentages. You can get up to 5% of the total loan amount. So you get the 5% option. It pays for your down payment and some of your closing costs. There are some citywide, like localized government insurance programs, or not assistance programs. Tarrant County has one where you can get up to $14,000. You've got to attend a class, a seminar. Dallas has one. Irving has one. You know, a lot of different ones have them. So when we do the application, we're really kind of looking at.
Okay, guys, I think Palmer froze up real quick. I'll pick up. So there's a lot of down payment programs out there that can really help you get going. And they're very good. We help a lot of clients with that. Palmer and I do that all the time. And, you know, it's a very good option. So let's kind of go over it this way here. If you're looking to buy a home, let's talk about how much money you need, okay? So if you're buying a $200,000 home at 3.5%, you're going to be putting down $7,000 for your down payment. Your closing cost right now is going to run somewhere around $7,000. So we're talking $14,000 if you're looking to buy a home right now. Okay, so that's what we're talking about. But now, how much money do you need up front? That's a very different number. So I want you guys to take this again. On a $200,000 home, which is more or less on the first time home buyer territory looking, you're going to put up what's called your earnest money. That's typically 1% of the sales price. So that's $2,000. That money will then be going towards your closing costs. So once again, if your closing cost is $7,000, you already put up $2,000, but that's what you got to put up front. You're going to put up the inspection is going to run roughly about $500. The appraisal is going to hit you about another $500. And then the option money. This is the money that, you know, when is your unrestricted right as a buyer to walk away from the home. When you go into contract, if you want to walk away from the home or you change your mind or the inspection goes bad, you can walk away. You'll lose the option money, but you'll get the earnest money back. Okay. So that goes somewhere right now in this market between $100 and $500. It is a negotiated dollar amount. So there's times if no one else is putting an offer on the home, I tell you, put up $100. But if there's multiple offers on the home, then sometimes you want to sweeten the pot a little bit and put up more money and have more skin in the game. That's exactly what earnest money and option money is you as a buyer putting skin in the game. Okay, so it's one of those things that are out there. Now, sometimes we have further evaluations beyond the inspection and repairs that need to be looked at. That can vary. The people that you'll pay for to come out, if I can get a roofer out there for free, I can get a foundation guy out there for free. But when it comes down to a electrician, when it comes down to a plumber, when it comes down to an AC guy, you're going to pay those guys their call pay. And that varies, depends on time of year. I've seen it as low as $30, and then it's really hot outside and the AC guys are working all day. I've seen it go up to $100. So it depends on who we're talking about. All right. Now, let's go to this example that Palmer was kind of giving us here, if you will, about using down payment assistance. Palmer's back on. Okay, jump on with it, buddy.
Yeah, so, I'm sorry. My router restarted.
It's all good. If you're buying a $200,000 home, okay, and you're doing FHA, your down payment is $7,000. Now, Palmer was just saying if they do down payment assistance, they can get that whole thing paid for. That $7,000 disappears. Okay, your closing cost is going to run about roughly $7,000. You've already put up $2,000 in earnest money, so you need $5,000 out of pocket to close on that particular home. Now, you've already paid your inspection, appraisal. So let's look at it this way. If you want to buy a brand new home, or if you want to buy your new home, not brand new exactly. If you want to buy a new home, your home, you're going to come out of pocket roughly about $5,000. But the upfront cost of renting can hit you anywhere for going to get a brand new place to go rent from $3,600 to $6,000. Which one would you rather do? Would you rather rent or would you rather buy? Just looking at the scenario, looking at it from this perspective, I think I know what I'd rather do.
Right. Someone has a question. Do you handle NACA?
Oh, NACA? Yes. Yes, we do NACA. We definitely do that as well. And let me say, it's another down payment program. That's what NACA is, guys. That runs through the city here of Fort Worth. There's so many options out there. I'm not knocking NACA, but
You
there's
try
so
to make
many
them
that you
funny.
can do. You can do T-Shack, you can do Tadaka, you can do Seth. Palmer can walk you through all of the better options that are out there. There's
that
so
was
many
good.
options out there for you.
So we can get you a list of those programs when you talk to
Yep.
Sasha or to Palmer.
Yeah. Okay, so Ed is asking, if you want to keep your monthly payment under $1,500, how do this out-of-pocket being so low help you? Well, it doesn't. So let's be clear about this, Ed. That's a very good question. If you want to keep your payment lower, the only couple ways you're going to do that is by putting a big down payment or buying a cheaper home. That's what it comes down to. So Ed asked a very good question. So the question that I need everyone to answer is this: how much do you want to buy? That's not how much home do you want to buy. It is how much do you want to pay on a monthly basis? What number is comfortable with your monthly budget that you want to be at? If you tell us that number, we'll back in and tell you how much house that you're looking at buying on the market. That's the more important thing. Stephanie and I budget monthly. That's how we run our household. So we can go buy a $300,000 house, or we can buy a $450,000 house, as long as it's going to hit within the budget range of where we want it to be. Very good question. Let me see here.
Another question: does the income limit apply on all three of the down payment assistance programs? Does
Yes.
the income limit apply?
Yeah, they all have varying limits. One is at 86,000, one is at 98,000, another one will go up to, depending on household size, up to 103,000. And then it's by county as well. Sasha, I think you're muted.
All right. Once again, guys, if you're ready to go down this process and you're ready to look at getting pre-approved, Palmer can pre-approve you right here on the spot. We're going to put his information down below. We just put his calendar in there where you can schedule with him. Sam, also go ahead and put Palmer's pre-approval link in there as well. If you want to start the application process, and you can't buy a house without doing it unless you bring in cash. If you bring in cash, it's a different story. If you're going to finance at home, Palmer will be more than happy to take you and help you out with that. Okay.
All right. Awesome. At this time, let's see who our next lucky person is to win a gift card from the Grub Burger Shack. So do this really, really quickly. We have Trey McBay.
Are they is Trey McBay on the Zoom?
He was on the Zoom.
I thought I saw him earlier.
Trey, are you still with us? Yay!
Trez.
I'm sorry. I said
Trez
Trey.
McBay. All right, Trez, you won. Congratulations.
Congratulations.
It's a she.
She.
My bad,
You know
Trez.
what?
Thank
I
you.
had Trey Songs. I cited the name, so Trey Songs, the singer. I'm sorry.
It's okay.
Hit us up in the chat and we'll get your information. We're going to keep it moving here, guys.
All right.
All right. Now, let's talk about house hunting. This is the fun part. This is what everyone loves to do. People love to go out there and start looking at homes. So how do you actually do this? All right, let's talk about it. First things first, I'm going to put the link out here on the Zoom. Sam, put this out here for people to get the chat mail group. How many people here love going to Zillow and Realtor.com? In true, you're looking for a house, okay? Put in the chat if you like to go there. Raise your hand if that's something that you love to do. I know a lot of people love to do that. But here's the dealio. If you do that in this market, you're going to miss out on finding the home that you want right now. There is a huge delay from homes in Zillow or Realtor.com, and you want to find them. Here's what we're doing on Chapman Realty Group. On our website, we only have active homes on the market. That means if it goes under contract, it comes off our website. Okay, it comes off our website in 5 minutes, so you're not wasting your time. Once we know that house is on the contract, it's pulled off constantly. So if you're really serious about buying a home and you want to be one of the first people to find what's really out there, go to our website. You can scan here, or we can put the link down below for you to be able to get onto that. And here's the deal. I got your information anyway, so we're not going to bug you. All right. But if you need our help, we're definitely going to help you out. So
Right, somebody had their hand raised with a question.
what's the question?
just had the hand raised.
No, I saw the raise up. That was me. Fine.
Oh.
Yeah. All right. So next, let's talk about new construction homes. I hear this all the time. I want to buy a new construction home. How can I buy a new construction home? Here's the dealio. Where's this drawing coming in? If you're looking to buy a new construction home here, now you need to know where to find them. I can send you to my website, but they don't put all their homes in the MLS for us. I'm going to send you to my other website that's specifically for new construction. We're going to put that in the chat for you as well. And here's the deal: when you're looking for new construction, you need a real estate agent. Once again, my services are 100% free because new construction homes are so difficult right now. Everyone has their own rules. Okay, the inventory is lagging all over the place, and prices are going up. And every builder, like I said, they have their own rules, and waiting is definitely not in your favor. And why isn't waiting in your favor? Well, here's the deal: the house that you see today that you want to go buy, somebody else saw it the day before, and they said that they were going to wait on it, and then they come back the day that you come see it. That's what happens in new construction. And they're limited on the number of homes that they can sell right now. So builders absolutely can't keep up. And I saw somebody had a question about with the cost of materials going up, is it a good idea to buy a new construction home? Here's the story. Yes, materials have gone up. But I can tell you right now, Stephanie and I are going through this right now as we speak. We're building a nice home. And I guess I'll tell a little bit about business. We got end up getting this house for, on a base price before we did our upgrades, around $390,000. And we have taken our clients to go see the exact same house. We have clients who are building the exact same home. And when they went to go look at it, 3 months after us, the base price was $420,000. Our house is going to be finished a week or two before theirs. What's the difference? There isn't one. There isn't one. As their cost goes up, they try to raise up the prices. So you have to be diligent about that and ready to move forward from that perspective. Okay. Hold up. Let me do something here. I'm not sure what that is on my screen. So that is what we're looking at from that perspective. I want to see, is there any questions out there about new construction real quick? Put them in the chat. Let's make sure we can answer your questions.
Hey, I have one for you, Sasha.
Yes, sir.
Cool. Are we allowed to do that? Are we allowed to ask? Okay, all right. So I heard that a lot of the new builders or new construction are having kind of like a bidding process for clients as they go in there because of the low inventory that they're looking at, as well as from my understanding, counties are only allowed to issue a specific amount of permits for areas. And so when people are going to look at new construction, they're almost being put in like a lottery. Have you kind of come across that at all?
Yes, let's talk about it. So first, let's take your first question. Is there a bidding process? There are every builder is doing things differently. So some builders are definitely doing a bidding process. So for example, let's say someone loses their home, unfortunately. They put in for this home, they end up losing it. And instead of them putting that house back out there, the next person just come up. Some builders are doing exactly as sellers are doing and say, you know what, I want your highest and best offer by X amount of time. They hit up real estate agents, we bring our clients in, and it is a frenzy of people just making ridiculous offers. So the house is being built and it was under contract for 420, and then somebody comes in and says $520,000. So yes, that is happening out there. Also, some builders are doing a lottery system in which if you want to get on a new construction home and you want to build, we have to get you with that builder right away. So there's a couple of rules around that with the lottery system. We got to get you registered with them. You may have to go through pre-approval with their lender just to say that you can do it. You can stay with Palmer. Obviously, you can definitely do that. And I will tell you from experience, mortgage lenders like Palmer are way better than on-site lenders at new construction sometimes. They'll give you high interest rates. They may give you some closing costs towards it, but you need to understand, look at the difference between what you're getting from them and what you're getting from the other. I highly recommend that you get a loan estimate. Correct me if I'm wrong, Palmer. A loan estimate from both lenders so you can compare apples to apples. If you're required to get pre-approved with their lender, make sure you do that.
Yeah, I mean that's the biggest thing. I mean they have their preferred lenders in companies like DHI or DR Horton has DHI Mortgage, and they own the company. Sometimes like LGI, their preferred lenders, Loan Depot, and really kind of what you want to look at is is the comparison. You don't have to use their preferred lender. They'll maybe offer you incentives. In our market, though, the incentives are really kind of going away because they might have somebody lined up that could purchase the house without having to give incentives. So yeah, looking at the loan estimate will basically show you the fees that the lender's charging, the interest rate, and everything like that. And then so what I've done in the past is compare either them to me or me to them and 5 other people or something like that, and kind of gone over what the fees are. And sometimes it's a good deal, sometimes it's not. I mean, Sasha and I have worked with some people before where their preferred lender was giving them about a 0.5 point or 0.75 point higher, and they had a lot of fees. So the amount of incentives they were getting from the builder to use them was a wash. And so we ended up assisting them with the loan because I got a better deal.
Someone said a certain builder, we're not gonna put them out there on blast like that. They're in the chat, you can check that out. Said they had to use their lender. Let me tell you something, when a builder tells you that you have to use their lender, that is an aggressive sales tactic. They cannot force you to use their lender. They can throw incentives your way, and they will do that. And say, if you use our lender, we'll give you X amount of dollars in closing costs, but you have the unrestricted right as a buyer to choose whoever you want to in the lending practices of buying a home, period. So when people are telling you that right there, that is telling you the character of the people that you're dealing with and the character of the company that you're dealing with. There are certain builders that I, as your realtor, will tell you, you don't want to do that. That they're
LGI won't allow you to use down payment assistance at this time. So I had a client that they closed last month. They bought an LGI home, obviously, but it was Loan Depot and I. And then so I ended up getting them a lower interest rate than what Loan Depot was giving them. But when I was talking to Monica, the sales representative, she told me, she asked me, she said, are they using any down payment assistance? I said, no, they're paying for everything out of pocket. She said, good, because if we know that they're using down payment assistance, we won't allow the sale to happen.
So you got to ask yourself, guys, why is that? Why would a seller care if using down payment assistance? And I'll tell you this, as a real estate agent, I represent sellers, buyers, both sides. It doesn't matter to the seller, but it mattered to that particular company because they were trying to force people's hand to go with their lender. Think about the character of the people that you're dealing with when that happens. So that's something you should think about. We got a couple more questions. Let's keep on the questions here. We're going to keep moving on. What do we have here? Someone asked a question about new construction being different in different locations. Yeah. McKinney versus Forney. That is McKinney. That's McKinney. McKinney is a very different price point than Forney. Mm-hmm. So location does matter. You can get the exact same house for far cheaper in different locations. But the question is, are you going to build the same amount of equity? Mm-hmm. And is that where you want to go? Do you want your kids in those particular schools and things of that nature? So there we go.
And definitely, I just want to chime in and say, if you're thinking about new construction and you going out and you're like, oh, I just want to go look at this model home and stuff like that, feel free to go and do that. But at the end of the day, what you want to do, which I advise you to do, is work with a realtor, preferably Sasha Chapman, but work with a realtor because they know the ins and outs in the language that they're going to try to kind of push over you because they're like, you don't know everything. And so they can tell you one story, but you want somebody that's knowledgeable, that's have their credentials and stuff in the new construction market. So that's valuable.
And you will have some builders who will tell you that you're going to get a better deal without a realtor. It's not true. What they pay us is baked in. And believe me, they have been reducing what they pay us these days. You need a professional on your side. Remember this, the new construction person, they're nice people. I work with a lot of them, have great relationships. They represent the seller. You need someone to represent you, negotiate on your behalf, following up with your home, being there when there's time for inspections, looking at how they're going to pour the concrete. There's a number of things that I do for my clients once the house goes under contract and pushing them to stay on track with that timeline. That's a difficult thing sometimes. So work with a professional. If you don't work with me, get with somebody. I implore you to do that. Don't go in this thing alone, especially when the services are 100% free. Okay.
I know we got to move on.
Hold on one second. Was there another question we had there?
Yeah, someone stated that they saw on the news where a builder increased the sale price of a buyer's home due to the construction costs.
Well, they'll try to do that, but here's the bottom line. They can't do that once you're under contract. I've seen someone try to do that. If you're under contract, your price is not going. I have seen builders buying people out and buying them out of their contract because their cost is going up. Let me just say this, their cost going up is real. It is not fictitious. It's not make-believe. And so they have to turn a profit. And so they try to turn that cost over to you. But the house you can buy today, guys, is going to be cheaper than what you're going to buy tomorrow. So let's go to this real quick. We're going to wrap this up. Once you make your offer, you got to move quickly here. You got to be first. You got to have a strong offer. You have to have an offer that is going to be comparable. Okay, so let's talk about that, making offers that compare on homes. There's two different values out there I want to explain. There is the value of how much the home is actually worth in the market. It's probably going to appraise for, let's say it's a $300,000 home, and it's going to appraise for, based off the comps that I see, let's say $310,000. But to win said home, in this crazy market, you might have to go up to 320, and people are waiving the appraisal. You have to be comfortable with that. I want to talk about that. So Palmer, let's go through that. If you waive the appraisal and that home comes in under value, that means you got to bring the difference. So you make a 310 offer on a $300,000 home, or let's say you make a $320,000 offer, the home appraised for $310,000, you're bringing back another $10,000. So I want to make sure you understand that, and we can talk a little bit more about that and how this works with appraisals right now. Paul, you want to add anything on that?
No, I mean, yeah. I mean, you have to be really careful. I mean, so if you're working with Sasha, you guys want to put an offer on a house, Sasha will run comparables to find out if your offer is going to be justified with an appraiser. And so, there's a couple different options that we are seeing. If the appraisal value comes in lower than the sales price, obviously we can dispute it with the appraiser. We can try to renegotiate on FHA and VA financing. Appraisal waivers are non-existent. The TREC, the Texas Real Estate Commission, they do not have the ability to have a contract that allows you to waive your appraisal rights on those two financing types. Conventional is a different story, but you can renegotiate if you're in those, or you cover the difference. If you really love the house, you'd have to cover the difference, the gap there. So, yeah.
All right. So real quick, let's I want us to kind of, we're getting ready to wrap up here. So once you're home, you're under contract, you need to make sure you're buying a healthy home. Derek is my go-to home inspector. He's awesome. He's great. Guys, Derek, how do you walk people through this to manage their expectations? Let's get going. What do you actually do?
First of all, let me start again by reintroducing myself to everyone. Again, my name is Derek Walls. I'm with Superior Real Estate Inspections. I've been doing this for about 15 years. And yes, I wanted to get started. First of all, identify or define the home inspection process. The reason I want to do that is because I want to put people in the right mindset and manage everyone's expectations. First and foremost, a home inspection is visual in nature, meaning we will use certain tools and different technology and during our inspections, but just so you guys will know, it is a inspection by TREC, Texas Real Estate Commission definition is a visual inspection of those components that are readily accessible. Now, what does that mean? That means if you have a root growing, a tree root growing into a sanitary sewer line underground, that's not covered in your home inspection. I mean, because that is not readily accessible, that's not visual in nature. So just so again that we can manage you guys' expectations, that's the definition by TREC that TREC put forth. Those are components that are visually accessible, visually inspected and readily accessible. Now, going on a little bit further, how much would you expect to pay for a home inspection? On average, that can run, as Sasha showed in one of his earlier graphics, anywhere from $400 to $500. And that just depends too on what the features are of that home. I know we've been talking a lot about new construction. Obviously, with new construction, you're not going to have to get a termite inspection, which would in return bring the cost of your home inspection fee down. One thing I would like to add as far as new construction is concerned as well, those of you that are veterans, we generally do give discounts to veterans because we definitely want to thank you guys for our service to our country. But definitely one thing you need to know, your VA underwriter and loan officers, they're going to be much more stringent through the inspection process. They're going to require that a termite inspection is done on 100% of their inspections. That's something you guys want to know and want to make note of, because I see it all the time where we actually end up basically having to force the hand because people are not aware of that. And we're asking them when we're qualifying you guys with the appointment, are you going VA versus or just conventional financing? And the reason we do that on new construction again is to prevent you guys from having these unknown delays where we get a call on the day before you're trying to close or the day of because you didn't get a termite inspection. So just note, if you happen to be using VA financing, it doesn't matter if the home, they just put the last nail in the home yesterday on the new construction, it will require a termite inspection. So that's just something I wanted to pass along to you guys. Again, still talking about new construction before we kind of dive into everything else. A lot of people have this myth perception that new construction, you don't have to get a home inspection done. Sasha and I talk about this on a regular basis where clients opt out of getting new construction inspected. And my answer to that is you're about to make, again, as Palmer said, one of the largest investments in your life. And so the way I look at it is an inspection is a part of your due diligence. You're making a decision. You're analyzing vast amount of data as it pertains to cost. And the best way to do that is to know what it is that you're buying. And that home inspection process is going to give you that opportunity to do that. The way I always like to look at a home inspection is just like test driving a car. I mean, think about it. You wouldn't buy a new car, and the cost of a car is a fraction of the cost of a house. You wouldn't buy a new car without test driving. So we like to align a home inspection with a test drive at home. So for instance, something that I like to share that we do in the inspection process that you guys would never do and probably never even think of. The minute we start our inspection, the first thing we do is we go throughout that house and we turn on all the lights. Because what we're trying to do is we're trying to purposely stress that electrical system of that home. So that gives us a higher probability of finding electrical issues or problems that may exist in that home that you wouldn't know from just turning on a light in one room or another room.
Right.
So again, that's something that we're going to do that you guys commonly wouldn't do. And so just keep that in mind. That's a part of your due diligence, and that's a part of a small investment to make to find out the things that you're going to find out about that home through the inspection process. So one of the things before I move on to, because we're just going to briefly touch on new construction. One of the reasons that I also want to debunk that myth about new construction inspections is oftentimes we do 1-year warranties that's associated with newer homes. We do inspections of new construction homes. When you don't get that new construction inspected, guess what happens? When you turn around 2-3 years or 5, however long later and sell that house, now they're going to get it inspected. And then what's going to happen is things that turn up on the buyer's inspection didn't get caught on your original purchase of the home from the builder. Now you end up paying for those repairs in the long run anyway, versus had you had the inspection done up front, then you could have pushed that back on the builder and had the builder to address those things and not have that out of pocket.
Absolutely.
So
I'll tell you guys, definitely get your home inspection. I keep getting this question. People are asking, they're asking me, Derek, should I get my own home inspection or just go with the new construction? And I'm like, nah, you want to hire your own inspector. I highly recommend Derek because you need someone who's going to work for you, who's advocating for you, who has your best interest at heart. They work for you. The inspector for the new construction builder works for themselves. Not saying that they're bad people, not saying that they're doing anything wrong, but you need someone who's going to look at the house according to code, and Derek is going to take care of that. In fact, Derek, I just shared our video that we did about new construction in there. If you want to go watch that, but
Awesome.
get your own home inspector.
And to be honest too, like Sasha said, the city inspectors, they're not bad people, but be honest, their knowledge of new construction is very limited outside of the scope and checklist of what they have to do when they perform what's called their city inspection. They literally have a checklist, and they're on that checklist. That's what they're going by. And I've met city inspectors at properties before, and I will ask them about things that I know that should be in place, and I'm not seeing it there. And to be honest with you, most of them have no clue. They have no idea what I'm even talking about, because they just have a checklist, and that's what they go by, and that's what they're accustomed to. And oftentimes they don't know much outside of that checklist. So it definitely is. I would like to just invite you to say, change your thought process when you're deciding on whether or not to have an inspection done, because it really is a part of your due diligence. So just definitely want to throw that out there. But as we delve into this too, we're going to start talking about, as the slide indicates, existing homes. We're going to, just kind of talk about some of the things, because there's some differences. I think someone even put in the chat our thoughts on existing home versus new construction. So one of the things I'll just throw in real quick from the perspective of a home inspector, there are benefits of existing homes versus new construction. One of those being right off the bat is typically with the existing home, you're going to have larger lots, you're going to have larger yards, more play area. My experience too, older homes are better from a standpoint of construction. Generally because of the fact that older homes a lot of time were built before the builder was a part of a corporation. So there truly was customer service that was involved with that whole process of building that home. And older existing homes tend to have more character, individual character. As we know, with newer construction, homes are kind of cookie cutter and look very similar in construction and features, but you just get a little more character on some of the older homes. So now that we've hit on new construction quite a bit, I'm going to move over and start talking more about the existing home. And yeah, Sasha, you can go ahead and proceed to the next slide. So when we start talking about existing homes, what we've done here is we've kind of categorized existing homes within different eras, different time frames, and hopefully we'll shed some light on because some buyers and consumers like you guys want older homes, but because again, they tend to have their own special character. But what I want to do is share with you guys from a home inspector perspective what you can expect or anticipate when you start looking at homes from different eras. Right here, we're showing an example of some findings that we had on a house that was built this was in the 50s. So again, as the slide indicate, homes that are pre-1960s, you're getting to homes that have crawl spaces. That's where you have the crawl space underneath. That's a picture that I took on a home that I was inspecting in South Dallas area. What you're seeing here is cast iron piping, and that cast iron piping is failing. You can see that it's leaking underneath the home into the crawl space. So this is something that you will commonly see with pre-1960s homes. That's one of the things that we'll ask always whenever either me or my office staff are booking appointments is, what year was your home constructed? The reason why we want to know is this, because we want to know, because oftentimes there's questions that we may have, you guys may not be able to answer. One of them being, does your home have a crawl space? When we ask that, most people are like, what is a crawl space? Well, this is exactly what a crawl space is. This is the area underneath the home where plumbing and some electrical was run throughout that house underneath the home. So again, a part of our inspection process, we turn on all the water throughout the house. Every sink, every tub, we turn it on before we enter the crawl space. What that's doing is allowing us to see and detect these type of deficiencies, which are fairly common with homes of this age and era. And before I move on to the next slide, again, one of the things you want to verify that's very big with purchasing a home within this era, has the plumbing been replaced? So that pipe that you see right there, that's cast iron, our recommendation from an inspection perspective is you want to see that cast iron has been replaced, because over time, cast iron does start to deteriorate. So yeah, we can go to the next one, Sasha. Okay, so here we're getting on into a new era of homes, those built in the 1970s. So again, very good, solid construction that was incorporated into the construction of these homes. One of the things that you see in homes in these eras that you won't see in new construction today is, if you look at your house, your new construction home as it's going up, a 2x4, you will see that it may be spliced into 3, 4, and sometimes 5 pieces. Now, the builders, I've even had that discussion with builders. They'll say it's because the mitered framing material is stronger. I beg to differ. Not saying that it's not sufficient, but I think that really what it does is it helps the builder to cut down on waste and the amount of scrap material that get discarded. Meaning they can take a 12-foot stick of lumber, cut it into a 10-foot member that is going to be used, and now they can take and use that extra 2 feet, splice it into another member, and use that as building material. That's one of my thoughts and on what we see in new construction today. But with the 1970 era homes, one of the things that you see in this next slide that you want to be conscious of, and that can be only detected through the home inspection process, you see a series of breakers. Breakers are circuit protectors for each individual circuit throughout your home. Most of you probably familiar with them. Breakers, you turn a particular circuit on and off, and that's generally for the purpose of repairs or maintenance. So if you have a light fixture you want to replace, or you want to replace a light fixture with a ceiling fan, then generally what we'll do with those breakers is you'll go in and you'll turn those breakers on and off as needed. So one of the things that we will do as you guys recall, when we first started our inspection, we turn on all the lights throughout the house. That picture in the upper right-hand corner of the slide, that is a picture of those breakers. We will scan those with an infrared camera that will let us know by illuminating that breaker in red if that breaker is actually running hotter than normal. So again, that's something that we will see and that you guys wouldn't have any idea of without getting an inspection done on your home. Another thing that's very vital and important for homes being built in this era, again, we're talking about homes in the 1970s. That image also show, if you guys see that wire that looks like it's kind of white in color, and that's for the conductor itself. The black portion of it is the sheeting or protection or that wire or conductor. Now, during the 1970s, aluminum wiring was prominent. That's what we were looking at in this particular diagram. So as a part of our inspection, a part of what you're paying for, you want to know if that house has aluminum wiring, because there are certain practices that need to be in place to make that aluminum wiring safe. And again, the only way you're going to know that is have the inspection done. We will remove the front cover off the electric panel to expose this. And what you're looking for is that the connections are made properly with pigtailing, which electrician would be familiar with. And that's how you couple aluminum wiring to copper wiring. Pigtailing is the proper way of doing that. Then what you don't see here is where the aluminum wiring comes back into the breaker. It doesn't have an antioxidant cream. That's the cream that you guys will see on your car battery to prevent oxidation on your car battery. So again, I'm not going to get into all of those details, but these are just things that makes it very critical and important to have your home inspected. Also within that slide, before we move on real quick, Sasha, I'm gonna expand on that. Just a code is, just so you guys know, just in the event that you currently own a home that was built in the 70s and you're considering getting with Sasha here in the near future to sell that home, it's also good to do what's called a pre-listing inspection so that you can get an idea of what will presumably be exposed about your new home when your new buyers come along to buy that house and you're getting ready with Sasha to put that house on the market. So one of the things that you'll see in this slide that wouldn't be allowed in by today's standards, and that would definitely get called out on the buyer inspection, that your water heater being installed in the garage on the floor. That's not acceptable, no longer allowed. And me as an inspector, I would emphasize that to my buyer to make sure that that gets corrected. Right now, by code, that water heater should be elevated 18 inches off of the garage floor. So if you own a home that was built in the 70s, or even one of the newer homes, and your water heater's installed on the garage floor, that's not acceptable, and that is going to get called out when you put your house on the market and that buyer comes in with their own independent inspector. Okay.
Trying to tell y'all guys, man, Derek is a wealth of information, and let me tell you, you need to listen to him. He's going to save you some time. He's going to save you some money. So Derek, real quick, let's talk about the big five. Like, what are the big five that they got to watch out for?
Okay, as this slide that Sasha has that's coming up, there are 5 things that that we'll speak of when we start talking about how you want to overall assess that house and that home and determine whether or not you want to move forward. Those things are your foundation, your roof, HVAC or heating and cooling, plumbing, and electrical. Now, what we've done on one of these slides, Sasha, can you move to that slide that has drawing the conclusions and the different tiers?
Yes, sir.
There we go, right there. So with that being said, out of those 5 things that I highlighted just then, I kind of took my knowledge as a home inspector and I married that to my perception as a consumer. I mean, because even though I'm a home inspector, I've also purchased homes and I, have relatives that purchase homes. So just know, every time I look at a home, I'm looking at it just like you or my cousin, my aunt, my mom, my nephew. I mean, that's just how we do our business. So with that being said, what I like to do is, I know our inspections are very detailed. Sasha can tell you that. That comes from my engineering background. So what I like to do is expand upon that information as far as those big 5. And what I did was I put those findings into tiers. Okay. That being said, what I have in tier 1, foundation, roof, HVAC. I took several bits of and pieces of my knowledge by categorizing this also specific to our region, which is North Texas. Okay, number 1, foundation. Because we have such a high clay content in our soil in North Texas is going to move and react to moisture at a much higher rate than anywhere else throughout the country. With that being said, the maintaining of our foundation is very important, and the cost to repair a foundation is one of the more expensive costs that you can incur as far as home repair is concerned. That's why we have that as our number 1 item of concern when it comes to the inspection and purchasing of a home. Number 2 is a roof. Again, because of the number of hailstorms that we have in North Texas, because where we're located geographically, the temperature and moisture coming off of the Gulf, meeting with colder temperatures coming down from the north, we just happen to be within a beltway where we get a higher amount of hailstorms than anyone else in the country. So with that being said, it is very important to get your home inspected so that you know if you are going to be faced with hail damage.
Exactly.
So that's another reason why it's important to get the home inspection done, to get that assessment done on the roof. Because even on a low end, for the replacement of a home, you're talking about a 2,000 square foot home. I mean, you could be easily be looking at $7,500 for a replacement of a roof.
Right.
So again, that's tier one. The next thing, again, we're in North Texas, which means we know we're going to have some hot summers. And with that being said, HVAC, it can be very costly from a standpoint of replacing it. I mean, a mid-grade system here in North Texas is easily going to run about 7,500 to 10,000 if you're replacing inside and outside components of that system. That's why what we did was we created those tiers, because those are the three most expensive things that you'll commonly run into with the purchase of a new home here in North Texas. Now, what
Yeah,
I
we
like
wanna
to say
protect you
from an
guys in there. We
inspection,
wanna make sure we get you guys going. Yep.
what's that? Oh, yes.
I was
yes,
saying we
yes.
want to make sure we get them protected. That I guess I would just say this, guys, because I got to make sure we're getting short on time here. Listen to
Okay.
your home inspector. Derek knows this thing, and Derek has saved a lot of our clients a lot of money in the end. If I walk you through a home and I'm showing you a home, as your real estate agent, I'm going to tell you when I see things that are pretty bad. Derek has educated me, and when I see things are pretty bad, I'm like, if I tell you I wouldn't do it, I'm telling you, I wouldn't do it. I want you to know that. And Derek is going to come through. He's going to see this home. He's probably going to tell you a whole lot more things that's going on with it. But if you want that home and you absolutely got to have it, and that's for you to have, then fine. We'll get somebody else in there to review that home to help you figure out what you have to do. But listen to your home inspector. We want to make sure that you're protected and whatnot. Stephanie has us for one more time for another drawing.
May be able to squeeze in two before we got this last presenter. I'm so glad you guys are staying tuned. It's amazing. So this drawing right here is being brought to you from Derek with Superior. So we are doing a drawing for a $50 Lowe's gift card. $50.
Everybody needs that.
Everybody needs that one. $50 from Mr. Derek. And our winner is Ed Hall. Ed Hall, thank you so much. You are the winner of today's big door prize.
Yeah, Ed's asked a couple questions.
He has. You've been so active. And
he's still there. All right.
So we have time for one more for Abel gets on for a Simply Sandra's customized gift card. T-shirt. So our winner for that one is, hold up, wait a minute, we're getting stuck together. Jennifer O'Kate. I'm sorry if I say your name wrong. Jennifer O'Kate. So you get a $25 customized T-shirt.
Okay. Hit us up in the chat, guys. We'll get that over to you. We got one more presenter here real quick. And we're going to give it to wrap things up. So once again, if you need to schedule out your inspection, there's Derek's information. Look at him in the chat. Ask him his questions up front. And Derek will he'll walk you through the whole process. All right. Now, you gone through this whole thing. You bought your house. You're ready. You have closed on the home. So we walked through. We did the final walkthrough. We made sure that we have understood the major difference between home repairs and home maintenance. Now it's about protecting your home. So you need, how long does it take for you to get a house? So for example, real quick, before I jump into protecting your home, if we meet today, okay, we go ahead and get you pre-approved. That takes a day or two for Palmer to get back to you. If you get him your information, Palmer can get you pre-approved today. We go house hunting. We start looking at houses. If you make yourself available to us, we're going to get you out there. And if you go through this entire process, you go into contract, you go through the option period. If there's any repairs, we negotiate that appraisal. You're in your new home at the end of the month. It only takes about 25 to 30 days for you to buy a home. So if you're really serious about doing this, and it's something that you want to do, we are here for you. We're ready to guide you through this process. In fact, if you want to have an ongoing conversation with me to figure out how we get started, I will go ahead and drop my link in it for a buyer consultation. You can schedule at your convenience when you're ready to go, and we'll go from there. All right. Now, Abel, it's about lowering their payments, man. How do you save these folks money, and how do you help them protect their home?
Absolutely. Good question. So let me reintroduce myself really quickly. So again, my name is Abel. I am with Goosehead Insurance. I know, funny name. Most people probably haven't heard of it. It's intentional because we don't spend any money on marketing or advertising. The way that our business spreads is by word of mouth. So we don't spend money on marketing or advertising, but even though we don't spend money on marketing or advertising, we're actually the largest insurance broker in the state of Texas. So hopefully that tells you that we do a good job. If one thing that you'll be able to notice is like whether it's Derek, whether it's Sergio, Palmer, Sasha, myself, all of this ties in together. So whenever in the home buying process, once you get to the insurance side of things, I'm generally the last person that you speak with before the home goes into underwriting status. What I do is I make sure that the home is going to be protected so that even after you're finished purchasing the house, the home is going to be protected. If anything ever happens, it's going to be restored to the way that it was. One of the things about insurance is that it's something that everyone should have. I think about it almost as like a wealth building type of thing. So for example, like if you guys were to, if there's some people who have homes that are paid off and they don't have insurance on their home, the cost for you to have insurance may be like, I don't know, like $2,000. But if something were to happen to the home, you could be looking at $50,000 worth of damage. I always think about it as how long is it going to take for you to save that money for you to have the cost to pay for the amount of damages. So for $50,000 worth of damages, you'd be saving a little over 20 years, $2,000 for a little over 20 years. I mean, I don't know about you, but for me personally, whenever I'm saving money, I'll always walk in with the intention of saving the money, and then one thing or another happens and it goes one way or another. So because of that, you want to make sure that you have coverage to protect yourself in the event of anything ever happening. One of the things for people with insurance is the payments are more than what it is you would like for it to be. I know a lot of people come to me and they're like, hey, my neighbor has the exact same house as me, the exact same number of cars. Why are they paying less than me? The reason for it is because whenever it comes to insurance, it's specific to every single person. There's a couple of strategies that I always talk through with people on how you can lower your monthly payments. If your car insurance is $300-400 a month, one of the best things that you can do is bundle the insurance with your auto insurance with your home insurance. On average, you're looking at discounts on about $500 just on the home side of things. On the auto insurance, I've seen people save significant amounts of money also. A lot of times whenever I'm helping clients purchase new homes, Sasha and Palmer get this feedback all the time, but they're like, hey, he got me a great rate on the home insurance, but at the same time, he saved me $500 a year on the auto insurance. So I always recommend bundling together. So bundling is one of the biggest strategies that I use because it's one of the bigger discounts. The other thing is, even though you bundle, it doesn't necessarily mean that you're always going to have the best option. I mentioned that I'm the largest broker in the state of Texas. What that means is that I'm actually able to look through the entire market. Every single carrier has different things that they like. So there's some carriers that are going to like first-time home buyers, other carriers who like people who have really great credit. I have carriers that like people who are young drivers. All sorts of different things like that. So I look through the market and find what's the best option for you. So I like combine both of those strategies of bundling and shopping the market. So I'll find the carrier that likes you the best, and then we'll bundle it together with the home and the auto so we can get multi-policy discounts. And then we engage the last step in the strategy, which is customizing your policies. So one thing that I do, I take my time, I explain every line of the coverage to people. And I found this out because whenever I was first starting, I was working on my friends and family's policies. And I'm looking at their policies and they have really great rates. But whenever I look at the policy itself, they're not actually being covered for anything. So I go through and I explain, this is exactly what it is that you're going to be covered for. And a lot of times it's a lot more educational than anything else. So I'll educate on what you're going to be covered for, what the policy is going to look like, and we build it the way that you want to. Once we've built it the way that you want to, I'll let you know this is what the price is coming out to. If you're comfortable with that, we can go with that. If not, we can rework it to try to get to a better price point. And I mean, ultimately, we'll work it out to what you're most comfortable with. So we combine those three strategies of bundling, of shopping the market and of customizing the policy to try to get you the best option and the one that works for you. And on that note, also, like whenever it comes to a policy, not all policies are created equally. A lot of people, whenever they compare policies with their friends, family, neighbors, whoever it is, the only thing you really ask is, hey, how much are you paying for it? You find out that someone else is paying a better price. And then you're like, hey, why do I have the same house, but I'm paying more for it? Every single policy has a couple of different things that are very unique about it. I know I mentioned earlier, my friends and family, like their policies, they were very affordable. But whenever I took a look at them, finding out that they had no idea what they were covered for, and the policies were not ones that were going to actually protect them if anything ever happened. One of the bigger things, like in the state of Texas, is that there's two types of policies. One that's called a named peril, one that's called an open peril. I'm not going to go into too much detail on it. Whenever we chat, I'll explain it a little bit more in detail. The named peril essentially says, here's a list of 5 to 6 things. These are the only things that you're going to be covered for. I'm sure you guys have heard of crazy stories. There's way more than 5 to 6 things that can happen to your house. I only write what's called an open peril policy. Open peril policy says, here's a list of 5 to 6 things. These are the only things you will not be covered for. Anything else, you would be covered for it. If any of you guys have Allstate for your insurance, call me immediately because they only write named peril policies. The very baseline policy that I write is going to be better than that. Then there's going to be water coverages. I'm sure with all the winter storm things that happened recently, hopefully none of you guys had any issues with it. But water coverages aren't something that come included in a homeowner's policy. It's something that's added on separately. And so I always recommend making sure you have those coverages. In Texas, there's going to be 4 of them. I explain exactly what it means and then let you know this is how much it's coming out to if you'd like to add it onto your policy. And then based off of that, we build the policy the way that you want. But also outside of wind and hail, water damage is the second most common reason why people file a claim. So I always recommend making sure you do have those water coverages. And then there's liability coverages. Liability is liability is actually the part of the home policy that I feel like is most neglected, and I feel like the most homeowners lose the most amount of money. Reason for it is if anybody comes onto your property and they were to get hurt. The example I'll always give is with Amazon Prime. I know everyone on here uses Amazon Prime. If the Prime guy is coming onto your property, he's dropping off a package as he's leaving, he's not paying attention, he trips and he face plants into the concrete. Who do you think is paying to put his face back together? Think it's going to be Amazon, or you think it's going to be you guys?
Hey, we got a question for you here.
Yeah, what's going on?
Go ahead.
Okay, I'll read. With hail damage being a known problem, are there a limit to the number of claims that can be filed? And does the premium increase after each weather damage claim?
That is a great question. So in North Texas, you know that we have more hail damage than basically any other part of the nation. Unfortunately, Texas, everything is bigger and better. The hail is being included in that. So with hail damage, the way that it works is you can file as many claims as you need to. With carriers, they have different risk appetites. So there's going to be some carriers that they're like, hey, if you have more than 2 claims, we don't want to take on your business. Other carriers are like, hey, if you have 10 claims, it's totally fine. It really just depends on the carrier. But that's why I look through the market and find the carrier that's going to like your specific risk the best, whether it be the house, whether it be your own characteristics, and find the best option for you. Along with that, also, one of the pieces I was going to touch on later that I'll just mention now, whenever it comes to the premium amount. So if you call any insurance company and you let them know, hey, I'm thinking about filing a claim, they're unable to move forward in the claim filing process without opening up a claim. It might be a situation where you don't even end up filing a claim, but if you let them know I'm thinking about opening up a claim, then they're going to open it up. What happens then is on your insurance history, it's going to pull back of on such and such date you tried to file a claim, such and such date you tried to file a claim, even if they're $0 claims, And those also end up negatively affecting you. On my end, I have a 100% fully licensed service team. It's not somebody's nephew or niece who's working at our agency over summer while they're in between classes or anything like that. 100% licensed. So if you call them and let them know, hey, I'm thinking about filing a claim, they'll walk you through the steps of what it looks like to file the claim if this is a situation where it would make the most sense to file the claim. So not only is it something that's protecting you now, it's something that's protecting you in the long run also, with potentially not having to pay more for having open claims that can affect you negatively in the future, whether it be
Awesome.
not like carriers not accepting your risk, or it be that you have a bunch of claims that are open and for no reason.
That's good. Hey guys, we got to wrap up here real quick. Sorry to interject on you, my friend.
Yes.
But we're coming to the end of the home buyer webinar. Okay, and home buyer / seller webinar. So here's the deal for everyone who stayed along with us. But if you are interested in buying a home or selling your home, here's the deal we're making for anybody. Anyone who wants to work with us, I will personally buy you a free home warranty to protect your home even further. Not homeowner's insurance, a home warranty. So you're going to go to Abel to get the homeowner's insurance. He's going to help you get that going. And then I'm going to help you guys and help you get a free home warranty if you work with us and you want us to be your real estate agent. And these folks here are on here to be your team.
Did we talk about that?
No, we didn't talk about that. It's a surprise. It's a surprise for everyone who attended the webinar, who stayed with us and attended the webinar, that goes and uses us and hires us to be your real estate team. And we're going to take care of you. You're going to get a free home warranty for attending this webinar.
I guess I can sign off on it.
My CFO said it's okay.
I guess it's okay.
She says okay.
Just kidding. Just a couple of things. Again, thank you again so much. Thank you to all our presenters. Thank you so much to the Potter's House of Fort Worth. Just a little bit of FYI, if you didn't know, all these awesome gentlemen here works all the DFW. So don't think that you're limited just to Fort Worth or McKinney or wherever you at. They go everywhere and then some. Like Sasha was just out in Rockwell not too long ago. So anyways, just want to say thank you to Mr. Sergio with the credit management. He wants to give someone lucky right now a $25 gift card to Home Depot. That individual is oops, sorry, dropped it. That is let me look at it. Oh, who is that, Sasha?
Cassandra Kayikindo? Cassandra, she was on earlier. I saw her earlier.
She was on earlier.
I'm not gonna. I butchered her last name.
Gotta be present to win. So next individual is Jason and Melody. McBride.
Oh, McBride. Yeah, I saw them too. Okay.
Yeah, they are still present on this Zoom. So congratulations to Jason and Melody. Got to be present to win.
All right. So we got to wrap up here. Thank you all for attending. If you do need our services, we're definitely here to help you. And here's the deal, to keep you educated, we got lots of resources from our website to our YouTube channel. And we're going to schedule some short topic go lives, so like 30-minute go lives, to dig into one topic. We may talk about down payment assistance one week. The next week, we may talk about the appraisal process. So just tune in, because we're going to be taking and bringing this information to you. You want to buy a house, you want to sell a house, we want to educate you, make sure that you understand what's going on in this market. And we hope we was able to bust some myths for you. And if you need anything else, we're here to help you. Thank you, everyone, for presenting. Thank you so much, Tiffany, for the opportunity again. Thank you, church. We love you guys at the Potter's House of Fort Worth, and we're out.
Great job. I want to say thank you to all of our attendees. This was a great webinar. I mean, every time we host these, you always learn some valuable information. So whether you're trying to buy a home, sell your home, refinance, I hope that you got some information that you can utilize and possibly utilize their services. If not them, make sure you connect with someone. I love what Abel said, is that this is a team effort. Everybody is needed in this whole home buying process. So again, wonderful job, Sasha and Stephanie, Chapman, Palmer, Abel, Sergio, Derek. This was phenomenal. And if you have any questions, everything has been dropped in the chat, but everyone who registered for this event, you will receive a recording. So the recording will go out probably later today. And once again, on behalf of the Potter's House Fort Worth and our team, we'd like to say thank you, and we hope you have a blessed day. Bye-bye, everyone.
Bye, everybody.
Bye.